This video is for education and illustrative purposes only. It should not be construed as personal financial advice, solicitation, or recommendation to buy or sell any securities. Please speak to a licensed financial advisor before making any investment decisions. Hi, I'm Jermaine, co-founder of the Learn, Grow, Invest community. And in this video, we're going to cover investing in the Jamaica stock market for beginners. Now, this guide is going to be a very simple one, easy to understand, and it's meant for investors who are just starting out, or maybe you've been investing, but you don't quite understand how everything works as a whole. What are some of the benefits of owning a stock? Next, we're going to talk about how to research and pick stocks, because a lot of new investors rather, are not sure how to go about selecting stocks. We'll talk about that. And then we're going to close out with a tutorial in purchasing stocks on the Jamaica Stock Exchange using a tool called JtraderPro. So that's the scope of this video. If you have any questions, leave them in the comments below. Follow us on social media, ask any question that you may have. Also, there are some additional topics that expand on the basics we'll cover in this video. So I'll link those ahead or in the description below. And yep, if you find value in this video, be sure to leave it a like, subscribe to this channel. We post investment content weekly. So before you invest, there are 3 key things I want you to think about. First, we're going to understand investing. So investing is spending money or allocating resources with the expectation of profit. Now, it doesn't matter if you're a short-term investor, a long-term investor. The goal of investing, the reason why you would have started, is to make a profit. So that's very important to know, because we hear a lot of times that persons maybe sell at a loss or buy, don't spend enough time doing research. You have to remember the purpose and focus of investing. 3 key things I want you to think about before you invest. First thing is your mindset. Investing favors those who have a long-term mindset. It favors those who are willing to do research. It favors those who understand and can control their emotions as it relates to investing. Very, very important to be a successful investor, and that's to master your mindset as it relates to investing and money management. The next thing that you want to understand as an investor is your risk profile. Now, 3 key profiles that I'll speak about here, but of course there are variations and combinations. First one is conservative. This means you aren't really comfortable with a lot of risk. There's moderate, meaning you'll take, above, above the conservative level amount of risk. Maybe some aggressive stocks, but for the most part, you're in the middle, you're average. The third is aggressive. So aggressive persons maybe look for opportunities to trade. They maybe look for a certain type of company. They may look to grow their money very quickly. There is no wrong investor profile. It's all about what suits you and your preferences. So bear that in mind. Third, you want to set SMART goals. When investing, you want to know how much you're trying to make, how long do you want to have that company for, and what are you trying to achieve with that investment portfolio? Very, very important. So there's this concept of risk versus reward that I want you to understand. So typically what we see with investments in general, not just the stock market, that typically things that are considered low risk usually has low potential returns, versus things that have higher risk would normally generate a higher return. Now, this is called the risk versus reward trade-off. And when we look at the market, we see things like cryptocurrencies that do really well, sometimes, double-digit percentages daily, but then it comes with an extremely high risk. So, it really depends. And again, that's what we said before, that preference you have as an investor. If you are aggressive, then something like cryptocurrency wouldn't necessarily scare you. But if you're conservative, it wouldn't be for you. There is, again, no wrong risk profile. It just all depends on where you are and the things that are driving your decisions to invest. So there are three key ways that I can think of to own stocks. You can go, directly to the stock market, meaning you just open an account, you get access to the stock market, you trade. Your first time to buy stocks can be through an IPO or an APO. We've spoken about this in other videos, but for those who, since this is a beginner video, when companies list on the stock exchange for the very first time, it's called an initial public offering because it's their very first, offering to the public. And usually what that means, you see a prospectus, you get details about the company, you have a chance to look at their financials or projected financials. And this is typically brought to market in a prospectus. And we have done IPO reviews on this channel. So if you want to check those out, please do so. And then the third way that is almost indirect is, a unit trust, an equity fund, or a pension plan. Some pension plans come with an element of stocks. So it really depends on how you want to get that exposure. Now, there's none that is better than the other. It really depends on what your goal is, right? So personally for me, I've utilized, unit trusts or equity funds before. I have a pension plan that is partly invested in stocks, and I've participated in both IPOs and APOs. So there is no right or wrong. It's just whatever you choose to be your way to invest. So next, we're going to look at opening a brokerage account. So there are some things that you'll need to open a brokerage account. Now, a broker stands between you and the stock exchange. So even if you decide to trade yourself, you will need a brokerage account because the stock market or the stock exchange works or interacts through brokers, right? So typical things that you'll need in Jamaica, you need a TRN, ID, proof of address, you'll need source of funds. They want to be able to match and say, well, if you say you're earning $10,000, you need either a pay slip or a letter or something to show that you do in fact earn that amount of money, and they'll want to match that with your deposits, right? So if you say you earn $10,000, you can't deposit 100,000 unless that is maybe from another account with your name on it. You want at least two references. They may ask you for a JP, I believe. It really depends on the broker. And there are some brokers in Jamaica. Well, there's one broker that you don't need any initial deposit. That's MVL Stockbrokers Limited. Then you have brokers like maybe Mayberry or Scotia who would ask you for at least 1 million. And then you have persons in between. So you can open a brokerage account with no money. There are some that ask for 5,000, 10,000, 50,000. So the range is there. I'll show you the list of brokers soon. If you're under 18, the things that you would need is your birth certificate. You'll need a parent or guardian to be on the account with you. And then when you're 18, you can take over that account because you need the TRN at that point. So what you will have is a joint account essentially until you're able to take over the account for yourself. So these are all the brokers that we have currently in Jamaica. This is 13. 9 of these brokers give you access to the JTrader platform that we'll cover later in this video. You can, reach out to them from their website or call them and find out what the requirements are, and then determine the one that suits your preferences. There is no right or wrong broker. There's no best or worst broker. It depends on what your needs are. So now we're going to talk about the basics of stocks. So what is a stock? This is very important to understand. Not many people understand what is a stock. So they're actually investing without understanding truly what it means to own a stock. So the first thing to note is that a stock represents part ownership in a publicly traded company. These are real companies we are investing in, real companies with employees, with customers, with suppliers that generate money. So it's very important to understand that, and that should shape your approach to investing, right? It's real companies that we're dealing with. So the reason why companies go to the stock market is to raise capital. They need to expand, or they need to pay debts, or some other reason, and they say, well, let me issue more shares, and through those shares we'll be able to raise capital. So these shares of stock, and sometimes a share is referred to as a stock, are sold or bought and sold on stock exchanges. So the Jamaica Stock Exchange is a stock exchange for the trading and selling of stocks, right? So maybe over the last 100 years, the stock market is known as the best performing asset class, right? Now, of course, persons who are interested in cryptocurrency may choose to say, well, maybe over the next 10, 20, 30 years, they're really expecting it to be cryptos. But so far, stocks have been historically the best performing asset class. And so the reason why I'm pausing here is that what this means is understanding of a stock means that you want to think about it and choose your stocks very carefully. You want to understand the business. You want to learn how the business makes money. You want to understand the competitive landscape of the business, because all of these things will impact how the company performs. It will impact how other investors view the stock. And there are some things that will drive the stock price that we've spoken about in other videos that you will want to understand. But just know that it's a real company that you're investing in. Don't miss that point. So there are two key reasons to own stocks, right? Everything really comes back down to these two things. One, capital gains. And a capital gain is really when you purchase a stock, let's say for $10, and you sell it for $15. You'd have made a profit of 50% or $5 on that purchase. That's called a capital gain. Now, of course, you can lose money on stocks if you sell that stock at a loss. So you bought it for $10 and you sell it for $8. Or maybe you didn't factor in your fees and you sold it at $10 again. You'd have spent on fees to purchase, you'd have spent on fees to sell, so you'd have actually lost money. But the main thing to remember, this is a beginner video, so let's just say capital gains, one of the ways in which you make money from stocks. The next is dividends. Now, dividend is a payment. So companies, when they make profits, may choose, so that this is optional for companies, some do it, others don't. They will pay a dividend in proportion to the number of shares that you have. So typically you will see, company A will be issuing a dividend of 10 cents per share. So if you have 10 shares and it's 10 cents per share, you get $1 in dividends, right? So your amount of dividends is based on the number of shares you own. Typically the announcement is made where you have to be a shareholder as at a certain date. Then they will also announce the payment date for the dividend as well. So those are two key ways, and that's really as simple as it is. There are no other ways now. There are strategies to make the most of these two things, but these are the two ways that you make money from the stock market. Of course, I said as well that you can lose money. So it's important to use these strategies carefully that you may choose to employ to invest. So in terms of benefits of owning stocks, I just covered ways to make money. Benefits to owning stocks is, first thing I said, you have ownership of the company, part ownership rather. You have voting rights, so you can vote on various decisions as it relates to, it could vary, right? But if there's an AGM, which is an annual general meeting, you may have the chance to vote on certain things as it relates to the company. And typically the company will say, well, maybe one share equal one vote or something to that effect. It really depends. And as I would have mentioned before, you get the benefit in terms of dividends, right? You also have access through owning stocks to additional offers. So we mentioned an APO before, where if the company may choose to go to the market again, they may have a particular benefit to existing shareholders. So if you have at least one share of the company and they're doing, an additional offer, then you may get access now or a special price based on being an existing shareholder. So there are two main types of shares now. I was using the word stock before. Now I'm using the word share. Just know that they refer to the same things. They're used in different ways sometimes. So for example, I wouldn't say, ordinary stock or preference stock. I would say preference share or ordinary shares, but they mean essentially the same thing. A stock and a share is the same thing. They're just maybe used in different ways. Now, so a share or stock is a unit of ownership in a company. So when you buy the stock, you are receiving shares in that company. You become a part owner, so you essentially have equity within that company. The more shares you own, the greater the percentage ownership, right? So there are two key types of shares. There's ordinary share, or what is often referred to as common stock. And as a part of the ownership I described earlier, there are usually some basic rights that comes with having an ordinary share or common stock. So you have the right to receive the dividends, as I would have mentioned before. You have the voting rights that would have been there, as we mentioned as well. You have a portion or you have claim of the company's undivided assets. Now, let's say that the company had to liquidate for some reason, they're going bankrupt. They would typically pay in this order. They pay their debtors first, they pay the preference shareholders next, then the common shareholders. So that is the difference, right? And we'll get into that a little bit more with the preference share, but that's one of the things that you want to know, that as a shareholder, you have claim of the company's assets, right? So the next thing is that, as I would have said on the previous slide, the ordinary share will give you access to additional offers from the company. Now, a preference share, think about it, there's preference shown. So the holders of these shares have certain rights or privileges over the ordinary shareholders. So I mentioned one before, where if the company is liquidating its assets, the preference shareholders would get paid before the ordinary shareholders. Now, with a preference share, you will receive dividends at a fixed rate. And this is typically, so let's say you have a JMMB preference share, 7.5%. That is the rate that you'll get in terms of dividend payments based on the number of shares that you have, right? You are next. So after the company's debtors, you are next in line to receive payment. And of course, this is all based on how much money the company has. But the preference shareholders get preference over ordinary shareholders. You typically will have no voting rights as a preference shareholder. And so those are the things that you want to think about in terms of the differences between the two. So with a preference share, as I said, you get, payments in terms of dividends, and that's based on that's typically known based on it's usually included in the name of the share. So like, as I said, the JMMB 7.5%, or, stock A, 3%, 10%, it really depends. But the details of the offer will be there. The details of, the share, the preference share offer is typically included. So far, I just want to do a quick, recap here. So we spoke about the company. a publicly traded company will list on a stock exchange through an initial public offering. That's when they will share their prospectus and try to get investors. You'll see all the details of the company, forecasting or past financials, and you'll have an opportunity to own a part of that company. The buyers and the sellers include me and you. We are the investors. We determine whether or not we want to buy or sell shares. And of course, we can only sell the shares that we own. We work with a broker. So the broker will be the middleman between us and the stock exchange. And the exchange is where the trading takes place. So for a stock to trade, there needs to be a buyer and a seller. So for every trade that takes place, there has to be two participants, a buyer and a seller. So now we're going to talk about the Jamaica Stock Exchange. Now, Jamaica Stock Exchange, over the last 5 or 6 years has been known as one of the best performing stock exchanges. Now, I'm not sure how well we did based on COVID. I haven't looked at those numbers yet. But I believe from maybe 2016, 2017, 2018, 2019, we were doing really well, top 10. And we got a lot of recognition for it. Now, the Jamaica Stock Exchange is a publicly traded company. It's actually listed on the exchange as well. So it's not a government-owned company. And as such, it would be doing the same thing as every other companies, right? It would present its reports. You can own shares in it. They will have requirements for companies to list on the stock exchange. It will vary depending on the type of company and how they want to list. We'll get into the different types of markets within the Jamaica Stock Exchange. We'll talk about that. But just understand that in Jamaica, there's a Jamaica Stock Exchange. In the US, you may have the New York Stock Exchange. In Trinidad, you may have the TTSE, which is the Trinidad and Tobago Stock Exchange, etc. So to have a stock market, there needs to be an exchange. So to find information on the Jamaica Stock Exchange, you go to jamstockx.com. I'll have the link in the description as well. You can go there, see information about the exchange, see news, see market data about companies, view any view historical information. There's a wealth of information on the stock exchange website. If you're investing in the local market, you want to have them as one of the sites bookmarked. You want to follow them on social media, because everything that is published relating to the companies listed on the stock exchange goes through the JSC. So we're going to talk about some of the functions of the stock exchange, and I've highlighted 2 key functions, right? So the first one is to foster growth in the financial services sector. The next is to provide an opportunity to protect against inflation. Now, this is a very important reason to invest, because if we try to save only, we're not going to be able to beat inflation. And that's very important in building wealth, in preserving our capital. And of course, some other reasons are there. I'll leave the slide up for a moment for you to read it. But you want to think about investing in the stock market as one of the means to protect against inflation. And if you don't know what inflation is, yeah, if you don't know what inflation is, look it up. It's not within the scope of this video, but it impacts the value of our money, right? 2 or 3 different types of markets on the Jamaica Stock Exchange. In terms of the differences between the main market and junior market, the junior market was actually established in 2009, and it actually provides an opportunity for the smaller companies to be on the stock exchange. So in terms of what the requirements are for the junior market, you have to be incorporated with a limited liability company in a CARICOM country. You need a minimum of 25 shareholders not holding not less than 20% of the issued ordinary capital. And you need fully paid, subscribed, participating, voting share capital, not less than 50 million and not more than 500 million. Now, I'm reading this from the Jamaica Stock Exchange website because I want to be sure to get it right. In terms of the main market, you have to be, again, incorporated and registered and operating within a CARICOM country. The total issued share and loan capital must be 200,000 Jamaican or more. The share capital portion not being less than 100,000. All of the issue of the security which is subject to the request for listing is to be issued and fully paid. In terms of ordinary shares or stock, the issued nominal value must be 250,000 or more, a minimum of 100 shareholders holding not less than 20% of the issued ordinary capital. Irredeemable preference shares or preference shares convertible into ordinary stock, the issued nominal value there must be 500,000 or more, and redeemable preference shares issued nominal value of 100,000 or more. Now, all of that is a mouthful. I'm going to have the link in the description in terms of the differences between the two. Check that out. But, most persons don't understand the difference. So I thought I would explain it here. You will have companies on the junior market that are within a certain threshold in terms of market cap. Once they exceed that market cap, they go up to the main market. There's also a tax break that is provided to companies on the junior market. I believe you get the first 5 years. Now, if that is wrong, just let me know in the comments below. When 5 years come, then they start paying those taxes that they would have, gained the benefit of not paying. And then we also have the USD or bond market. So there are some stocks that are listed that have a USD portion. So they'll have JMD shares, USD shares. So you can trade those on the JSE. You have bonds as well that may be there, and you can buy and sell those as you wish. So next we're going to talk about stock research and analysis. Now this is very important in understanding which stocks to buy. There's this concept that we say in investing called do your own research. It's one of the things we try to help persons do here on Learn, Grow, Invest. We have videos explaining how to analyze a stock, how to understand and perform fundamental analysis. This is what will help you determine whether or not a stock is worth shortlisting. Once you've shortlisted it, determining whether or not you'll actually put your money into it. So the process I'm going to take you through now is called fundamental analysis. It sounds technical, but it's really not. It's just two key things, right? We're going to have a quantitative analysis. So quantitative means that we're focusing on the numbers. We're looking at anything that is measurable from the three financial statements. So the first one is the balance sheet. Now the balance sheet will list the company's assets and liabilities. We have the income statement, which is what it says. It shows the income and profitability of the company. Then we have the cash flow statement. The cash flow statement shows how cash moves in and out of the company. And I've covered these statements in depth in another video. I'll link it above. Check that out if you want to understand more about these statements. But when you go through these, what you're doing is performing quantitative analysis. So you go through the quantitative analysis for the purposes of determining a stock's value. Now there's this concept of an intrinsic value of a stock. So if you've ever seen somebody say a stock is worth X dollars, it's because they've gone through the financial statements, done a forecast or a calculation of what's called the intrinsic value. And this value is what they have determined based on the information they have and the projections that they would have done. They would have come up with what they determine to be the true value of the stock. Now, this value is always changing. It's not static. It is based on a few factors. Again, we cover this in depth in other videos. The sources of this information are the financial statements, news, economic reports, etc. On the qualitative side now, we want to look at things that are more of, like it's intangible. So it's not something that you can necessarily see. Well, you can see it in some cases, but it's not about the numbers, right? So you may look at the quality of the management, the brand, the goodwill of the company, any proprietary technology, etc. So it's really about the intangibles. So something like the sentiment of the company means a lot in terms of what that company may be perceived to be valued. right? There are certain things that will not reflect in the balance sheet or the cash flow statement or the income statement. So which is why we recommend that you use both qualitative and quantitative analysis. So this is really the difference between the two that I would have mentioned before, but both are important. So we recommend that you use both techniques to examine a company's operation and determine whether they're worthy of investing or not. So using all of that information, I'm going to walk you through some steps to analyze stocks, right? And we cover this in depth. I know I've said that so many times. We cover this in depth in another video. First thing you want to do is go through the annual reports. Some of the key areas that we recommend that you look at: the company information, what they do, how they do it, where they do it. You want to look at the management discussion and analysis, what the management has said about their numbers, how they're performing, their outlook, some key things. You want to look at the financial reports. You want to analyze those reports using some very key ratios. Next, you want to look at the quarterly performance, right? Not just the annual report. You want to look at each quarter, how the stock is progressing, how they're performing, how they're adjusting, or how they're fulfilling the plans that they would have stated in their annual report for the coming period, so we can compare. Next, we want to look at the landscape. Who are the competitors? What's the landscape like? What's the sentiment of the company? Is it in a growth industry? Is it a monopoly? Things like that, very important. And you want to look at now the things that will drive the stock price. Now, there are some stocks that will perform really well based on news. There are others where the news doesn't really do much for it, and it maybe moves a lot differently. All of these 4 areas though help you to get to a place of understanding the full picture of the stock, and then you can make an informed decision on it. So now I'm going to cover how you can buy stocks using JtraderPro. So JtraderPro is an online tool. It's linked to the Jamaica Stock Exchange. It is an online trading platform. Now you would go to JtraderPro.com, and at the start here, the very first thing that you need to do is create an account. So where it says new user sign up to the left here, that's what you would click on. And then these are the fields that you will need to fill out. Now I'm seeing where it's a little bit small, but you're going to just fill in your details. So your first name, last name, email address. That's step 1. Next, you're going to fill in your address. So your street address. You'll need a mailing address as well, because they'll need to send you maybe documents or dividend checks or etc. You want to have a mailing address. And you can select the option that your mailing is the same as your permanent address. And that will just kind of limit you from having to enter it twice. You need your phone number. You need a tax or TRN number, your date of birth as well. Once you've done that, step 3 is to create your login. So you need to choose a username, you need a password, and you're going to enter 3 security questions. Now, these security questions, they're going to rotate every time you try to log in. So if you put, question 1, what is my dog's name? The next time you log in, you're going to say, what is my dog's name? You need to enter that. So after you type in your username and your password, step 2, you're going to answer the security question, and then step 3, you're in. So we're all the way now entering all of that information. We need to accept the terms, first we need to confirm that the information is true and correct. Once I select it, I, John Brown, agree, click continue. Then we'll now accept the terms of using the platform and trading on the Jamaica Stock Exchange. And that's it. That will give us access to the JTrader platform. So after you have access, there are 2 key things that you want to do from there. So what you're seeing here is actually my account. Of course, I've blocked out my account information. But 2 key steps you want to follow right after you create your account. Step 1, you want to add a JCSD number. Now, that is a number that is used by the stock exchange to link your brokerage account. That's the simplest way I can say it. All right. So the first thing that you want to do is add your JCSD number. Now, this number will be provided to you by your broker. Just ask them for your JCSD number. They'll give it to you. And on the screen, you'll see how to add it. So you type in that number. You type in the account name. The account name is how you want to associate with that account. And, you'll enter the account holder's name. So if it's your name, you enter that. You select the broker from the drop-down list. And then you put the amount. If this is your first time, you may want to put the amount of funds you want to request to be added. Now, to do this, you have to be sure that those funds are with your broker. Then you request a funds in, which is step 2, and that is added to your JTrader account. Right. So that's, as I said, step 2. So after you've added the JCSD number, you want to now request a funds in, because that funds now will allow you to purchase. Now, if it is that you already have shares or stocks with that broker, once you add the account, those stocks will be there as well. So you can sell those shares and use that money from selling the shares to purchase more stock. So it really depends. If it's a brand new account, you'll need to fund it first. If you have shares on the account, you can sell those shares and use that money to purchase. So once you've done those 2 steps, you will be able now to, let me go back 2 screens. Once you log in, you'll see your accounts, you'll see the amount you have there. It will show status of approved. You can view the details of the account. And so the next thing that you want to do from there is maybe purchase, right? So you can place an order. You go to trade, click place an order, and you'll select your account from the drop-down menu here. That's the first step. You want to choose whether or not you're going to buy or sell. Now, if it is that I want to purchase a company, I need to know its ticker symbol. Now, there are 2 ways to find out the ticker symbol. I can go to the market data on the Jamaica Stock Exchange website, scroll for the company I'm looking for, and it will show the ticker there. Or I can go through the market section, search through, find that ticker, click on buy, and it will bring me to the same screen. Next, I want to choose the order type. Now, there are different types of orders. For example, it can be a market order, which means that it will fill at whatever the current market price is for that stock. This one can be a little tricky, because if you choose market price, it could work out to be higher than what you want to pay for it. So I like to do what's called a limit order. A limit order allows me to enter the amount of money exactly that I want to pay for that stock. Next, I want to enter, the quantity in terms of the number of shares. I want to enter that price, as I mentioned before. If it's a limit order, I need to set the expiration date. So I can say, keep this order until it's filled, or, cancel it at the end of the day. There are options there, and we'll get into a live demo in another video, but I'm just explaining the basics here. The next thing that we want to do, so that's us, placing an order, and it's the same for buying or selling. Next part we can look at is the markets section. So on JTrader, I can view the different markets that I mentioned are on the stock exchange. And what I have highlighted here are the 4 different types of markets that I would have mentioned. What you're seeing above are the indices. That's how the Jamaica Stock Exchange is tracked, through indices. And below it, you're seeing what is now the main market. So you see some of the companies down here. The market is currently closed at the point that I took the screenshot. So that's why it says closed here. And I'll show you on the next screen what some of these details would look like. So this is for JMMB Group Limited. So we have the ticker up top, JMMB GL. So the first area that I want to point you to is on the right. This is what we call the queue. So what you're seeing over here are all the buy orders and all the sell orders. Now, as I said before, for a trade to take place, you need a buyer and you need a seller. So on the buy side are persons who want to buy the stock. They would need to put in on that same screen that I would have showed you, or through their broker, they would have, decided a target price. They would have decided on a quantity based on the amount of money they have, or just, a predetermined amount of shares that they would want to own. And then now you have persons on the sell side who are saying, well, I have this stock already. I want to sell it at this price. These are the number of shares I have for sale, and this is the amount of money I want to sell them for. The important thing to note is that with the queue are for orders that are not yet filled. If the order is filled, it will not show on the screen. That would be already a completed transaction. And you can typically scroll through and see all the details of the queue, right? Next thing you want to see here, if you look to the left, you will see a chart of the company. So this is showing the 3-month chart. It's highlighted here. So this would be the price history and volume for JMMBGL over the past 3 months. So I can, click on it, see what the price would have been at a certain date, see how it has been trending. And this can give me just a high level overview of what has been happening with the stock. So that may help me to determine the price at which I want to enter at. The third thing is that, to the bottom left, we'll see a few things. We'll see the last traded price. So remember on the right, I said the queue doesn't show, the queue is showing all the unfilled orders. The last traded price would be the last successful trade. 36.98 would be the price that the stock closed at on the day, or on the last day of trading. The change in terms of cents is the dollar value of the change from where the stock would have ended the previous day. And then what you're seeing next is the percentage change. So that 15-cent change is equivalent to a 0.4% change. And then below that, you're seeing the open price, the best bid, the best ask, and the volume traded. Now, this information is helpful because at times you want to look at the volume traded to understand if there are a lot of persons that are trading the stock or not. So I wanted to just kind of zoom in on the queue for you to understand, how to use this information. You want to sometimes look at the number of units. You want to look at the price that persons are buying and selling for. And this is just kind of a close-up of the information that you were seeing before. And it's just for you to understand that this is coming from all of the brokers. It could be many different investors or institutions. There's no way to really know. There are some platforms like, for example, JMMB Moneyline, I think, or Sagicor, which will show you a little bit more detailed information. But it's the same queue that everybody will see in terms of the stock exchange. So with this information, as I said, you can determine the best price to buy at. If you choose, for example, a market order, then it will fill it based on the best sell price if it is you're buying, or the best buy price if it is that you're selling. So let me know if you have any questions about this below. Hopefully this was a very informative video. If you did find value in it, please consider giving this video a like, share it with your children, your friends, your coworkers. Share it and help us reach more persons in terms of investing. If there's anything that we didn't cover that you'd like us to cover, let me know in the comments below. Stay tuned for the videos that we have coming out on stock reviews, investment strategies and principles, and just general, topics that we feel may be relevant for persons to become successful investors. So thank you so much for watching this video, and I'll see you in the next one.